What is going on, guys? Mo here. Welcome back to another video. Quick disclaimer before I get started. I am really sick today, guys. So you might hear me like sniffle once or twice. But yeah, I'm basically traveling tomorrow, so my voice is kind of different because I am sick. So I am traveling tomorrow, and I wanted to produce one more video before I go traveling for the week because I still want to stay consistent on YouTube. So yeah, I had no other choice but to make a video today. So excuse it, but it will definitely make up by the value that's in the video. So please deal with me just for this one video, but I'll definitely make sure that it's worth your time. So when it comes to this video, obviously I even forgot to introduce what the video is about. In today's video, we are going to be discussing how to catch reversals. Okay, how to spot a reversal and how to get right at the bottom of the move or right at the top of the move and ride the wave. Okay, but you want to be able to catch a lower time from entry as well. So first thing that you want to do obviously is understand the market structure. Now, weekly bearish, monthly bearish, but the daily right here has a broken structure for us. We have obviously failed to create a lower low. The price action is a bit messy here, but overall, what we can tell just based off this price action, okay, and we are going to be trading like the 3-hour time frame here, so price back here is not going to matter that much in this case, but our most important price action, this segment of price action right here is important to us. So you see that we've been creating higher highs, pull back, higher high, etc. So this most recent trading range, where do we look to buy from? Okay, where do we look to buy from? If we're taking a look at this trade range in itself, okay, we grab the raise, and I'm looking at this low, and I'm looking at this high, okay? Let's just use the replay tool just to make things simple. Okay, so now I'm up here. I see that I've hit a point of interest. Price is reacting, price is dropping. Where do I look to buy from? Okay, so one of the first things is obviously I'm going to be looking to buy from discounted areas in the market. Okay, so discounted areas, this would be somewhere around here, 78.6, etc. Obviously, we have two major demand zones for us. I guess here, somewhere here. I also have demand zone here. Why do I avoid this? Because this is above the 50. This is above the equilibrium, so I tend to avoid this one. Instead, I'm going to be looking at the one right here. In the discounted area, I'm going to be looking for buys from this level right here. So, I mark out this area. Just like this. Then I simply continue, let price action do its thing just so we can see. Okay. And then boom. There you go. So of course there's multiple scenarios that you could take. You can either take a risk entry where you just wait for the point of interest to trigger and you just start buying straight away. Or you potentially could wait for some sort of confirmation. So this is what we do. I am not looking for buys until I reach a proper higher time frame point of interest. So the reversal stems from higher time frame point of interest reaction. You're waiting for a certain higher time frame point of interest, and that is it for us. We filled in imbalance. We got the demand right here. I see, etc., etc. 78.6 level. We look to buy from here. So now when we go on to the lower time frame, and we still have our zone marked out, by the way. Okay, now we can drop down to the lower time frame. We can start seeing what price is starting to do. Okay, so let's go down to like the 4-hour time frame. Okay, so as you can see, the main thing that you want to look out for is obviously there's going to be two potential scenarios that occur usually when you reach here and this zone actually does hold. It's either going to touch and go instantly, or it's going to start accumulating, and most of the time it's going to start accumulating. So what we can see here is an accumulation schematic playing out. We can go down, we can really go nitty gritty of this, but I'm not going to do that. The main function of the accumulation schematic, you need to understand that all it does is build liquidity on the top, on the bottom, then eventually break structure to the upside. Okay, and yeah, so when we go down to the 30-minute time frame, okay, let me actually go down to the 1 hour. Let me go up to 1 hour, and let me show you guys quickly if you were to mark it out from an accumulation perspective. So obviously you'd mark out your preliminary support. This would be like the first sign of buyers coming in. Okay, so you can either mark this here or this PS, it doesn't really matter, and then you have your seller's climax. Okay, so look at how we built liquidity right here. Okay, so we had 3 lows right here, boom, selling climax once again. So more people getting on the opposite side, selling climax, and then straight away you get the automatic rally. Notice how we are approaching okay, the higher time frame point of interest. Pretty much now we have just about touched it, and now we're breaking 1 hour structure. Okay, so now this is our first sign of, okay, this is when things get interesting for me. I don't really care about the PSY. In fact, I'm not looking at it in accumulation at all until phase C, phase D, okay? Specifically phase C, because that's where my entry is going to be. So I don't really care what happens up until then. So obviously price comes, breaks the high. Breaks the high, and then you go down and you get the ST in phase B. So the ST in phase B ends up clearing liquidity of all the previous secondary tests, okay, and the selling climax. So the liquidity under here. So look what price does constantly when it comes to an accumulation, okay? Price will usually be very, very strong coming down, and then as it slows down, the pullbacks become weaker and weaker, and notice each low gets kind of manipulated, and then the lows get manipulated, and then boom, you have something like this. So this is what an accumulation looks like, okay? And then you have something similar again. You get like a reaccumulation, price continues, and then you'll hit a higher time frame point of interest, and then you get a distribution, okay, and price continues down, etc. That's how the market's playing out. So this is exactly what you're getting right here, okay? So the bigger the accumulation as well, okay, the bigger that you can expect the move to be, okay? So law of cause and effect, okay? So as price, the bigger the consolidation, as price cooks up, you can expect the reaction to be much larger, okay? So obviously we get this break, nothing interesting for me right here, not interesting for me right here, okay? And then we get the push down. This is our last push down right here, okay? And this is my spring. This is my spring. So this is basically our institutional candle. Your spring is your institutional candle in smart money terms. So whenever you're taking a look at Wyckoff, you're looking for the institutional candle. It's going to be occurring in the spring. Then your mitigation is your test, okay? So I'm not going to really mark this out because it'll just end up taking much time. So just understand the functions behind it. Feel free to pause it, take a screenshot and mark it out for yourself. It'll play out. So obviously we have the spring right here. Price ends up clearing the low, and now we get that big push up. You see the bullish momentum that we're starting to see. Now, every single time price is pushing up, okay, it's testing the path of least resistance every single time. So as price pushes up here, and my structure has been already broken right here, okay, but the lower low got created right here. So this structure was confirmed. This break of structure becomes irrelevant to me at this point. My new break of structure would be, if I would take this low into consideration. Now this is not a lower low, this isn't a lower low, and this actually is one confirmation for me right here that this move down failed to break structure, failed to break this low. It only just wicked under. So that was a liquidity purge. That wasn't in fact a break of structure. So for me, that's one confirmation, okay, of potentially switching, and now the move is ready. Obviously we get that bullish move, it's very, very strong, okay? And this would be my number 2. So my break of structure will be right here. I would need to see price close above this, okay, in order for me to see break of structure. Now it could be the close or it could be the wick, it doesn't matter. We can even go to wick. Price eventually comes up, a retest down, and it doesn't hit my AC yet, and then it closes. Now this is the area where I look for a test and I look to buy. So now here I'm looking to buy. So as I can see, as we approached my higher time for point of interest, it took a couple of days for this position to cook up, okay? It did in fact take a couple of days for this to cook up. And then obviously you wouldn't have really known like where's the SC, where's the AR, where's the PS until price actually starts getting into phase C and you see that spring. This is where I get interested. This is where I start marking out my accumulation or just kind of understanding the function behind it, okay? Because once you understand the kind of the psychology behind an accumulation and distribution and the market phases in general, the Wyckoff events in general don't become that important in itself. Of course, it's good to understand what's the meaning, like what's the kind of event behind the preliminary support, what's the event behind the AR, etc. And you can simply do that by just simply looking up the Wyckoff website, and there's like a very, very extensive kind of explanation on all of these. But we will be going over all of that either way in the Wyckoff course. Lennox, our Wyckoff educator, will be covering all of these things in much more detail. He'll be covering Wyckoff on like 1 minute time frame, 5 minute time frame, even the second time frame. So make sure you stay tuned for that, because that course is going to be released very, very soon. So as I said, make sure you stay tuned for that, because yeah, absolutely brilliant trader when it comes to Wyckoff, okay? So obviously when we drop up to the 3 hour, this is the this is kind of the candle that looks neatest. From all my different candles, the 3 hour just looks the best. Okay, you have the last down candle before the up move, you get the breaker structure, okay, you get the lows being cleared, and this is the entry. Okay, obviously you got the breaker structure right here, and now we start looking for buys. Okay, so the accumulation has occurred, etc. The price action wasn't the neatest right here, but it doesn't matter as long as you kind of understand the gist of it. Bear in mind, we have just touched the higher time point of interest, and yeah, so we go, and now we wait for the test. Okay, so we wait for the test. So my stop loss would simply be right here. My entry will be at the open of the IC, and my target will be this high. So all in all, this would give me a nice 12 to 1 RR trade right here. And as you can see, I would target this area of liquidity. Okay, so I target this high as my take profit. I will be securing partials as we go along each time I break structure. So like for example, I broke 15-minute time frame structure right here. I would secure partial. Okay, and then if I came up once again, let's say I came back down, touched off another like demand right here. Okay, and then for tomorrow, okay, so we have the demand right here. For tomorrow, we push up. I will use this new high. Once I break it, I will secure partials like 5-10 pips above it. Okay, so I'll keep securing partials each time we clear a new high. We're talking like 25%, whatever it is. All depends on your trading plan. I have sent in my trading plan, my management style to the Discord already. So make sure you check out the server guide. I have it sent in there for anyone that's in there already. So yeah, make sure to check it out there. So that is pretty much it when it comes to trying to predict where a potential reversal could occur and how to break it down to the lower time frame. So to recap, what you're looking for is price to come to a point of interest on a higher time frame. Okay, and then you wait for some sort of consolidation to occur, and that consolidation is going to be accumulation, and then you wait for the Wyckoff event. Okay, so you wait for the schematic to play out, and then the main key, the two main areas you're looking for is the spring and the test. Okay, bear in mind that you can get in on the test multiple times. So here was the second entry. If you missed this one, this entry you do not teach on YouTube, you only teach it in the group. So this was the second entry you could have gone in to right here if you missed this one. So that was an SC1 for anyone that knows what I'm saying. Okay. But yeah, this is a scenario number 2, scenario number 1. So price, as I said, you wait for the spring to occur, blah blah, clear liquidity, break structure, you wait for the retest mitigation, and you simply execute. Simple as that. And then price break structure to upside. That is your upside continuation, has been confirmed, and now you simply just look to add onto your buy, keep adding onto your buy until there is a reason where price says, okay, it's time to go bearish. Okay, so it is as simple as that. Once again, guys, apologies for my voice. I know it sounds a bit different, but as I said, I'm really sick. Hopefully you guys gained value from this video. Once again, if you are interested in getting access to our course, getting access to our weekly calls, signals, etc. I also have like a new announcement very soon for you guys, so make sure you stay tuned for that. But as I said, if you are interested in it, make sure to head on to fuacademy.io and get yourself signed up there. The team is absolutely killing it every single day, and we have a brilliant community of traders to show for it. All right, so with that being said, thank you guys for watching, and I'll catch you guys on the next video. Have a good day.